excited to be here today. Thank you to the City of Quincy, for Cubic Labs, and all of you and our wonderful moderators for making it. So I'm the general counsel at Komorebi Collective, where we invest in exceptional female founders, and I also help run Women in Blockchain, where we try to make this crypto landscape more diverse through educational initiatives, community building, career initiatives, and all of that. And please come out to our event this evening at 6 o'clock across the street. And I want to talk about how there's a lot going on in crypto today. Recently there was the Ethereum merge. There's been a lot of talk about stablecoins, whether algorithmic or pegged, and them crashing. There's been a lot in the NFT and DAO space. And as a result, there's been a lot of regulatory interest and potential actions related to it. And I think it's really important that we sort of talk about how that will influence things going forward. And we have two amazing panelists today. So Gus Coldabella, who is a partner at True Ventures, where he focuses on global public policy and regulation as it relates to cryptocurrency, cybersecurity, and other emerging technologies. Previously, he was the general counsel at Paradigm and Circle and helped create the Crypto Council for Innovation. And Marie practices at Goodwin's technology group, where she advises blockchain companies and governments with legal and regulatory issues most commonly related to securities, commodities, banking, and corporate law. And she's also an adjunct professor at Boston College Law School, where she teaches a course called Blockchain, Cryptocurrencies, and Digital Assets. And she loves all things related to the functionality and economics of crypto, token offerings, smart contracts, CBDCs, stablecoins, and NFTs. And wow, that's a lot of different things.
Thank you, by the way, for not booing when she said we are lawyers, because there was already one gentleman, and I introduced myself, and he was like, oh gosh, I hate lawyers.
So I think that's what's so amazing is both of you are lawyers, but both of you have completely different perspectives on this as well, because you help companies and you teach a class, and so you see what people are excited about. And I think to start us off, Gus, would you mind telling us about what the regulatory landscape is right now? Like what's coming down the pipeline?
Totally. Thanks everybody for being here. The first panel really touched on this in a state and local way. The federal environment is super important as well. And zooming out, I mean, I started going down to DC to talk to legislators and regulators about crypto probably in 2017, 2018. And at that time, you could count on one hand the number of members of Congress who knew more than, and I love him, but the mayor when he was talking about this earlier. And those who did got their information about crypto because of the bad news that crypto resulted in, like the Mt. Gox hack or other hacks or ransomware using Bitcoin as ransom. We've moved from that point in 2017 or 2018 to a point now where the President of the United States in March 2022 put out an executive order on digital assets, where we have at least 3 and maybe more active bills in Congress being debated about jurisdictional issues around crypto, and where nearing 535 members of Congress have some opinion, some attitude about this. That sounds like good news, and I think it is. But the landscape is a little bit more complex than that, because I really appreciated the founder view that we heard in the last panel. I have that as well. We all have that. The idea of being, say, a founder of a drone company. If you're the founder of a drone company, you're looking at the Department of Transportation. You're like, oh, what regs apply? Department of Transportation, this is very simple. If you're the founder of a crypto company, you're thinking about regulations from the SEC, the CFTC, the IRS, FinCEN, the Financial Crimes Enforcement Network, OFAC, which administers United States sanctions, the IRS, countless other entities in the federal government, and that's only on that level. We have 50 states that are also interested in regulating some aspect of crypto. So if you're a crypto founder, you have really two jobs. One of them is building, and the other is keeping your eye on the horizon for what's happening on the regulatory front. And that's why Mari and I and the lawyers that are interested in crypto hopefully are so helpful to builders. Because builders who are just pounding out code know that there's something that they have to be worried about out there. And don't get me wrong, you have to be worried about it. But what we like to do is help shine a light through that fog and say, okay, here are the risks, here's what applies to you, and here's how to smartly manage them. So I think that's a little piece of the landscape right now.
Thank you so much, Gus. And Marie, do you think that with all the increased attention and members of Congress and everyone else who now have had a long time to learn more about crypto and are more informed, do you think it's actually gotten a little bit easier, or are we still in the same issues of, well, founders are still worried about securities laws and everything else that they were back in 2017?
Yeah, I actually think that we are yet to see the fruits of all this education that Gus and other folks are doing in DC. So we don't have a comprehensive regulatory framework for crypto companies. It's pieces there and pieces there, like Gus explained. It's possible that in the future Congress will pass something that will be comprehensive. I'm not that hopeful. There are some news that there are stablecoin bills that may proceed. I personally don't think that will happen, unfortunately. Maybe it will. So we are left with the SEC being the strong regulator that says that all tokens, if not almost all tokens, are securities. CFTC says we are happy to regulate, but the SEC won't allow us to regulate. And then we have the state money transmitter issues. So it's all about managing risk. How much risk are you willing to take? If you don't want to take any risk, do you have to stay away from the US entirely and operate elsewhere? Or are you able to do something with accredited investors? Or are you able to launch your crypto business serving all, even non-accredited investors? So it's all about managing risk, since we don't have a clear regulatory framework for these businesses.
Susan, I'll just add one thing, since Mari brought up the SEC. Sometimes I feel just a twinge of sympathy for the SEC, because the SEC was created at a time when we're just after the Great Depression, and Congress said people are raising money in all kinds of different ways. We can't predict in this statute how they're going to raise money, so we're going to give the SEC all kinds of statutory authority. Right? Anything that people use to raise money could potentially be regulated by the SEC. So they have a broad statute. It was written in 1933. Like cutting edge technology in 1933 was the rotary phone. And now we're using 1933, 1934 statutes and a Supreme Court case from 1940 called Howey to regulate this entire new industry with massive, massive energy. The problem here is that part of crypto is investing. That's great. But part of crypto is using. Part of crypto is using tokens to show that you're part of something, or that you have the ability to participate in this ecosystem, or to pay for a service. Saying, as the current secretary of the SEC does, that everything is a security might be allowable under that totally broad statute, even though I disagree with it. But is it right from a policy point of view? Having this uncertainty that Mari talked about, where things are happening through piecemeal adjudications and enforcement actions, rather than a comprehensive system of regulation in the United States, is going to say to those founders who we were talking about in the last panel and this one, I don't want to take on that risk. I have enough business risk. I've left my job at this big company to be a founder and start something in crypto. That's risk enough. I don't want to worry about the SEC breathing down my neck. So this is why I think having the president put together this executive order is important, Yet to be seen whether it results in the kind of comprehensive scheme that I think we all want. But having a unified approach rather than an agency by agency and state by state piecemeal approach is going to give those founders at least some measure of certainty that they don't yet have.
If we are trying to predict what this comprehensive regulatory framework will include, I think we have to look at what is the goal of securities laws? Why is the SEC breathing at our neck? It's not to prevent investors and consumers making bad investment decisions. It's to give them enough information so that they are informed when they are making these decisions. So the SEC wants token issuers to disclose as much information as possible so that whatever you are investing in, you know all the risks, at least whatever is information is available. So I'm pretty sure that if we will have something coming from the SEC, it will be heavily focused on disclosures.
And to be fair, right, there has been a lot of fraud and there are a lot of bad incentives in the system for things like ICOs then, NFTs now. There are a lot, pre-mines, pre-sales, all that kind of thing. So I agree with you guys that they're in a pretty tough spot. And what I'm wondering is, with all this regulation, do you think it's pushing founders to work in certain areas in crypto as opposed to others? So, for example, recently, the Facebook Meta group that was working on Diem, well, part of them decided to pivot to Lightspark to work on the Lightning Network because it's clear that Bitcoin gets is treated a little less roughly than a lot of the more security-like crypto. Is there any of that you're seeing?
I think definitely when the SEC heavily went after token projects because they were investment contracts and securities, I think that gave rise to the NFT industry because there was an idea that maybe NFTs are not securities so that there's a lighter regulation for them. And the SEC, of course, then doubled down and said, wait a minute, some NFTs actually may be securities. So it again depends on how you structure it. If it's transferable, if there is an expectation of profit, do you fractionalize it? Stablecoin industry, I think, is one industry that has developed a lot because there's some hope that maybe that part of the crypto industry is not regulated by the SEC. Again, the SEC issues makes a speech saying that, wait a minute, some stable coins actually may be securities. If you have an algorithmic stable coin, you're noticed by the SEC. The SEC is now very carefully looking at algorithmic stable coins because there's an active manager behind the stable coin and saying that look at the money market fund regulations and then compare your stable coin to these money market funds that are securities. So I think it definitely gives path to some parts of the crypto industry to develop more if there's easier regulation in that tunnel.
Yeah, Susan, I would just add to that. I think we do have people injecting regulatory concerns into their design, but I do not see people leaving the field altogether because of the regulatory uncertainty. I do see people making jurisdictional choices because of the regulatory uncertainty. That is, where is my office? Where are my people? To whom do I sell? And the problem with that is it creates fewer jobs in the United States. People in the United States who are consumers don't have the economic benefit of this technology. And the systems that will inevitably be built are not being built they might not be built in jurisdictions that share our values of making hard promises about financial privacy and other things. But I mean, some evolution that we have seen is if you rewind the tape to 2017, projects wrote white papers and said, we're going to build this thing and we're selling our tokens to essentially finance it.
Right.
That's a security, right? It wasn't sort of absorbed by folks that when you turn over some value and become part of a common enterprise and rely on some other people to build something,
right,
that's a security, but it is. Today, the types of projects and tokens and ways of working together responded to sort of the legal realizations that happened in 2017, and I think are much more sophisticated about not having tokens be in exchange for money, and having DAOs, decentralized autonomous organizations, run the entire show rather than having a small group of people that token holders can rely on. We won't go deep into the law, but those are both sort of crypto ethos things, decentralization, and sort of broadening the reach of a financial opportunity. But they're also responses to regulation, because it's a security only if you're relying on the efforts of others. If you're relying on the efforts of yourself and other token holders, then that may be something that is sufficiently decentralized as to not be a security.
Right. I think that makes a lot of sense. Maria, I wanted to go back to something that you had said about stablecoins and how the government has been putting together more of a framework for them. Do you think that with the coming regulation on stablecoins, that central bank digital currencies, for example, will take their place? Or do you think that, no, they're in completely different spheres, and if so, why?
It depends on if CBDCs can be easily used on metaverse, I think, because on metaverse you need something that's native there, and the tokens can be moved without exiting the metaverse system, going into the traditional banking system. It's possible that the CBDCs are just like a better version of the current digital money that we have now. Like if you put on your lawyer hats and you think about money, the real legal tender is actually only physical paper bills and coins. That's legal tender. If you sell me your hat and I give you digital Venmo payment, you can refuse it and say, no, I want my legal tender. So in the future, when the Fed issues native digital dollars, you cannot say, no, you have to sell me your hat. That's the difference. And if the technology what the Fed is creating is interoperable with crypto world, that's amazing. And then I think stablecoins may have to rethink, why do we exist? But I don't think that's happening. So stablecoins have this place to do business. With CBDCs, I think the big question is whether the countries are building bridges between their stablecoins. We can use the US digital currency with the euro digital currency. Did you, by the way, hear that the European Central Bank tapped Amazon to develop the pilot, the prototype for the digital euro? And imagine if the digital euro and US dollar will be interoperable, but then the Chinese digital currency won't. Or other way around, if the Chinese and European will be interoperable, but the US digital dollar won't. So the US government has so much to lose with our dominant world reserve currency status that they are correctly, I think, being slow in carefully thinking, how do we want to do this, instead of being the quickest one to win the game.
Yeah, one quick additional point on CBDCs. I think that was a great rundown. And the legislation we are most likely to see most quickly out of Congress is one about stablecoins. So the reports on the EO touch on CBDCs as well. But I have and many in the crypto sort of policy sphere have some serious concerns about government-issued digital money. Mm-hmm. And they mostly center around privacy. Because if we use the blockchain technology and we are wallet-based, every transaction between you and me, between me and another vendor, political donations, charitable donations, donations to maybe unpopular causes, purchases of things that may not be in the government's favor, are all potentially knowable by the government, right? I'm not saying they will be known by the government, but it's like having that bowl of candy over in the corner and say, you just can't look into that, right? But the government's like, and as an alum of the government, like, okay, we have this treasure trove of information, a crime, a terrorist attack, something horrendous has happened. Should we crack into that? Right? So if private entities like Circle are issuing stable coins like USDC, and the private sector is coming up with privacy-preserving technologies, I think that is better from a privacy protection and public policy point of view than having the government create what is essentially a database of every transaction that folks are engaging in.
So I think that's a very good point, and it is a huge concern that especially those who started out in crypto are very concerned about. To push back on that a little bit, it does depend on what the goals of any particular government are, right? Is it a democratic government? Like, so for example, Canada in its wanting to put together a CBDC environment is concerned about financial inclusion and like, no, we don't want to track people. We want people to be able to use this without electricity or internet, like in our northern communities. So like those are some of the policy goals. Whereas if you get to countries who have a lot to lose or who have want to control who uses the money, and maybe even other countries that use the money, and like how can we use this as a tool for surveillance? Like, I also understand that if it's there, it will likely be used, but maybe the private sector also has a lot of issues. Like, well, why is the private sector making a profit on government money? And I know, Marie, that previously you had talked about how, well, if the government issues a digital currency, like what is actually the role of banks? Like, can we get rid of them altogether, other than, I guess, for lending purposes?
Yeah, so what do we need banks if we have central bank accounts and central bank money that's fully backed? That's a good question. Why would you keep your money in a bank? Maybe the bank in the future has to offer you higher interest rate for you to keep money there. They have to rethink the services they are providing because it's not anymore the place where you can deposit your money. Regarding the data that government might see from your CBDC use, you can also think the positive side. If they can see that, okay, yesterday our citizens bought so much ice cream, we are having a heart attack soon, we can raise the tax on sugar tomorrow. So we can make quick decisions also based on that data. We can do some good things also. And maybe the private sector can then use the CBDC technology and create like VPN style of networks where the government cannot see what's happening with their CBDC in this private network.
And I think that goes back to Gus's point as well, where we can, make incentives for people to behave better, but also is that the government's role, and what if they use it for a bad purpose? So we have a couple of minutes left. I just wanted to ask both of you, what's one thing that if you could change about the current regulatory environment to make it easier for crypto companies to, innovate, keeping in mind the risks as well, what would that be?
If I could make one change, I would ask the SEC to clearly say when a token is decentralized enough so that it's not anymore a security. I agree that if you sell tokens before anything has been built, it's an investment contract. But if there is a point in time when your token is no longer treated as a security and can be listed on Coinbase, for example, I want to know what is that moment.
I think that's a really good one. But I also think that we have a lot of focus on the SEC because the SEC has been the big dog in the junkyard. And as we move from a world where we're getting our services from centralized businesses in offices with people to code on a blockchain, I think we have to define as a government and as a society what the rights and obligations are of that code on the blockchain. I don't want to go down this particular rabbit hole right now with 1 minute left, but we've seen a recent regulatory action against Tornado Cash, which continues to be a service on the Ethereum blockchain that obscures the source of funds. People use that for privacy purposes, and bad guys also use it to obfuscate how funds move across the internet. Is that code something that has legal obligations to report to the government. I think we believe, the crypto advocacy groups believe that no, it's autonomously operating software, but there's a lot more specificity that we need in the policymaking process around the nexus between autonomous software and privacy and what is allowable.
I think that's a really good point to end on.
All right.
Thank you very much. Thank you, Marie and Gus.